Hello there. Welcome back to Cost and Management Accounting N5. In this video, we want to look at a question from a question paper of November 2023. And this is about the choice. This is question one on that question paper. So we've got multiple choice questions that we have at the beginning of the question one. And then we are going to proceed on the true or false section that is following after the multiple choice. So the question that we have in terms of question one reads, various options are given as possible answers to the following questions. Choose the answer and write only the letter A to D next to the question number, that is 1.1 to 1.15 in the answer box. Right, this is what we are given. That was first part, which is 1.1, reads possible entries on the debit side of manufacturing overheads account are. So remember, on the debit side of the manufacturing overheads, that's where we are going to find transactions is indirect material, indirect labor, factory rent, some of the examples that we find on the debit side, and then we also have factory maintenance. So these are some of the examples that we gave in the debit side of manufacturing overheads. So if you look at all the various options that we are given there, you would see that applied overheads for the period is one that's given, which is not correct. Then we've got under recovery of overheads. So remember, when it's under recovery of overheads, we find it on the credit side of the manufacturing overheads account, but over recovery is the one that you find on the debit side. So this one is out. Then water electricity participation, we know that this one we don't find it in the production cost statement, but we only find it in the profit or loss account under less expenses. So it's out again. Then we are left with maintenance cost of the factory, which is very correct. So D is the most appropriate according to question one. So we are going to indicate D as our answer. Then we go to the next question, which is 1.2, and it reads predetermined overhead rate is calculated using budgeted dashes basis, and we know that it uses prime cost, so we can just indicate it as prime cost as our most appropriate answer there. Then we go to the next one, the difference between the the time recorded on the clock cards and that recorded on the job cards is we call it the idle time. So we have got C here is our most appropriate. Then we go to the next one. The dash is calculated in the balance sheet. We know that the net profit we calculated in the income statement. Net loss also in the income statement. Remember, in the income statement you can find either profit or a loss. So this one's income statement. Then we go total assets and equity. We know that in the balance sheet that's where we're going to find all the total assets, and then the equity representing our capital. So which is correct. Then total production cost we don't find it in the balance sheet, but in the production cost statement. So we FX C is the most appropriate. Then we move on to the next one, 1.5 is the double entry to record direct material purchased is, remember, this is direct material that has been purchased. So the material control obviously is the one which is receiving. So we are supposed to go to the debit side of the material control. So we are on 1.5. So you'd see that debiting material control, if we have it on C or D. Then we now go to the credit side. We don't credit vector overheads, but remember we are the method of buying of the material. If it's a bank, we are going to credit bank. If it's cash, we credit cash. But and if it's on credit, we credit as control. So this is what we have. So D becomes the most appropriate. So we have got D then. Then we go to 1.6 to see what we have. 1.6 reads one of the methods of calculate depreciation is the, remember, two main methods that we have to calculate depreciation. We've got straight line method or the cost method there as the first one. And then we also have the diminishing balance method or the reducing balance method. Those are the two main, although we have other methods that we can use. So D becomes the most appropriate that we have there. Then we go to 1.7. Store manufacturer sent stock to China seed stores. The stock has not yet been received at China seed stores, but it has included the stock in its books. So it means this stock is still in the movement of coming. So according to the responses that we are given, we see that stock in transit is the most appropriate that we have there, which is B. Then I will go to 1.8. The journal to get a total of overheads actually spent during the year is the overhead spent. Obviously, this is the payment that is being made. So the cash payment journal becomes the most appropriate. So we have got D. Then we can go and look at 1.9 calculation of net salary for an employee. Remember, we say gross salary and then we subtract deductions. So the most appropriate that we have there is C. which is the correct one, gross salary less total deduction. So we've got C here. Then we go to 1.10, applied manufacturing overheads means, so we know that it means allocating manufacturing overheads to a specific item. So according to all the responses that we are given, A becomes the accurate one, the most appropriate according to the responses given. Then 1.11, an example of direct labor is wages paid to the so if it's a direct labor, it's wages that is being allocated to the workforce that is actually producing the product. So we can look from all the responses that we have, and we see that the most appropriate one is C, which is saying worker operating machine in producing the product. Worker operating machine in producing the product. This one is more direct. So this is our direct labor. So we go to the next one, which is 1.12, which is 1.12. So we can check what we have. It reads over recovery of manufacturing overheads occurs when the allocated overheads are. Let's try to see. This we see it when we've got more than the actual overheads. When allocated overheads are more than the actual overheads, that's when we have the situation of over recovery. So 1.12 we have got B is the most appropriate. So it means the opposite is true. When it's now under recovery, we are going to have less than the actual overheads. So this is what we have. So 1.13, the human factor that influence labor productivity is, you can check according to the responses that we are given, and you see that C becomes most appropriate, no incentive to be more productive. So we have got 13, most appropriate that we have there is C, and then we have got 14 is here. Selling and distribution costs are included and subtracted on the remember the selling and distribution we find it in the income statement. That's where only it is adjusted. So you've got income statement. Then income statement is used to calculate, remember the income statement calculates the profit or the loss of the business. So you see that B is the most appropriate, which is saying the net profit for the year. So we have got net profit for the year as our B. Then we go to the second part, which is the true or false part, which is question 2. Indicate whether the following statements are true or false by writing only true or false next to the question number, that is 2.11 to 2.1.10 in the answer form. Then 2.11 reads seasonal fluctuations can cause large over applied or under applied overheads, which is very correct, because these fluctuations are the ones that are going to cause these variances that are going to lead to over applied or under applied. So we have got true as the most appropriate. It's the first one. Then second one, the final amount in the cost of production must not be the same as the amount of finished goods in the production control account. So let's try to look at this one, which is false. Remember, in the production cost statement, we are calculating the cost of finished goods. We are calculating the cost of finished goods. That's why at the end of the production cost statement, we are supposed to add open work in progress, then we subtract less closing work in progress. We are trying to match the equivalence of finished goods out of the work in process, work in progress. So this is what we have. So you see that 2.1.2 is 2.1.2 is false. It's false here, so we can get with our F. Then we can go to the next one, which is 2.1.3, which is the income statement of the manufacturing. The income statement of the manufacturing is same as the one of a trading concern, which is not correct again, which is false, and they are not the same. Remember, we have got our income statement of a trading from a trading business, and then of a manufacturing business, which is very different. Remember, when it's a manufacturing business, we are supposed to carry our production costs to not our production costs, then carry it to the trading account. It's going to replace the purchases as the purchase entry. Purchases represents a trading, and when it's not a trading, we don't put purchases, we put cost of production. So this is what we have. So on 2.1.3, we have got false again. Then 2.1.4, wear and tear is calculated at the end of the year on non-current assets. So you'd see that we don't calculate specifically wear and tear, but we calculate depreciation that has been caused by that wear and tear. So this one also 2.1.4 becomes also our false. Then we go to the next one to see what we have. If we have got any other that we are having, let's go to the next page. You see that we're 2.1.5. And integrated system is when the factory's cost accounts and financial accounts are integrated into a single accounting system, which is correct. So we can indicate our true. And you go to the production report is compiled regularly to compare hours clocked and units worked to measure productivity in an effort to control labor cost. So we see that this is true again. Then we go to a new average value is calculated after each issue of stock, and that average price is then used as the receipt price. Then we see that this is false. We can see that this is false. Then we go to the next one. The straight line method means that the asset appreciates every year by the same percentage. So you'd see that this is correct. Sorry, this is false again. The straight line method, remember, it calculates depreciation, and it's whenever there's depreciation, it's going to reduce the carrying value of the non-current asset, so it doesn't appreciate. So 2.1.8 is false. So that's what we have there on 2.1.8. Then we go to the next one, 2.1.9. The production cost statement is a special financial statement describing the activities of a manufacturing concern, which is true. Production cost statement is prepared for a manufacturing business, so it's true. Then this is what 2.1.9. Then go to the next one, 2.1.10, which is the last one. According to the piece rate method, wages are calculated by multiplying the units produced with the rate per unit, which is correct. Because on the piece rate system, we are saying what has been produced is what you produced is what you are going to be paid. So what you have produced is the number of units produced, and then I will calculate by the rate per unit to find the wage that is supposed to be paid to an individual worker. So 2.1.10 it's true. So this is what we have, guys, according to this video. Those who haven't subscribed, please subscribe and share. We are still coming with more videos as we prepare for exams. But as for this video, I'm signing out. We'll meet again in the next video.